Gold's best quarterly move in 30 years. Phil Carr, Gold and Silver Club. The big shock for the gold market and commodities markets in general was the big move higher in the dollar yesterday. Some say gold's rally is inconsequential, but can you talk us through what we saw from your perspective, please, Phil?
Janet Yellen had come out earlier on midweek favouring a cautious approach to monetary policy because the US central banks, they want to avoid making big mistakes in the market. Of course, at the moment, what we've seen so far over the course of the quarter is the US dollar index breaking down to 9-month lows. If you look at that in the context of the price of gold, gold's had its best quarterly move in over 30 years. So over the first quarter, a 16% move to the upside. It's the strongest quarter we've seen on gold for over 30 years. So in a way, the pullback that we've seen on the US dollar, although it was large, it's the biggest one-day move we've seen in over a month, it was partially to be expected. A snapback in price like that, a reversion to the mean. I know right now the US dollar, again, it's starting to retrace after the move it's had today, and it is providing a little bit of support for gold. Gold, technically speaking, for those trading gold at the moment, you see a lot of key support for gold sitting at the 50-day moving average. The price has currently been hovering about that level. We're seeing continued support around that technical zone currently. If we were to close below that, I could see a further move lower and potentially more support for the US dollar. But right now, if we do hold on to current levels on gold, which is at 1,230 US dollars per ounce, I do think we could get a stronger move to the upside here as well.
Speaking about policy, gold sales surged in Japan through March after the country's move to set negative interest rates sent investors scurrying for shelter. Sales increased 35% in the first quarter. Is this a trend you think is likely to continue?
I do see this trend continuing. I do believe we're entering into a new economic cycle where central banks are starting to adopt the negative interest rates. We've seen really negative interest rates being another form of currency devaluation. So when central banks, they cut their rates, they're further reducing liquidity in equity and forex markets, and we're seeing that driving a lot of capital into commodities, which has benefited gold significantly, and it makes them much more profitable markets. That's what we're currently seeing in the current market conditions where central banks are starting to adopt the negative interest rates, and we're definitely seeing that in Japan.
Among other precious metals, silver was down 0.5% at $16.11 an ounce after reaching its highest since late October the previous day. Those holding ETFs might have been rubbing their hands together on Tuesday, but what's the story moving forward for silver?
Well, silver has definitely had an impressive gain this week, up nearly 6% on the week. Silver broke out to 5.5-month highs, and we're also closing in on a 10-month top at the moment for the silver market. We also broke through very critical resistance, which is sitting at $16 per ounce. So it's definitely interesting that you note the increase in holdings on the silver ETFs, because we've seen sharp inflows into silver-backed exchange-traded funds, which suggest investor appetite for the metals has been strong. We've seen an increase of 946 tonnes since the start of the year for the silver holdings of physically backed ETFs. What I find interesting over the last week is the gold inflows have been reduced. So we started to see outflows in recent days. In fact, just yesterday we had the biggest outflow in the SPDR Gold Trust, the world's large gold-backed exchange-traded fund, falling 5.05 tonnes, which is its lowest in a month. That was just on Wednesday. So we're definitely starting to see investors shift their sentiment. We've seen possibly traders and investors moving out of their gold positions and then moving into silver, seeing that as having more upside potential in the months to come. Technically, silver, since we came down and revisited the 200-day moving average, which was about 10 days ago, we've had significant gains to the upside. So we've seen a lot of traders continue to add to positions. Silver right now, if it remains above $16 per ounce, particularly if it closes the week above that level, it's really building a very strong base. Technically, you've also got a triangle formation. You have a downward trending channel which has been in place for the last 4 years. And if you look out to the higher time frames, if we do close above that channel over the course of this month, it opens up a lot of upside. So I think traders and investors who are happy with the results they've had so far from their ETFs, which have exposures to silver, I think they would do well to hold on to those at the moment.
Phil, thank you for your time and insights as always. Well, that's all from me, but don't miss out on the latest news by clicking back to Dukascopy TV. Bye for now.